And the Fed weighs both inflation and unemployment rates when making interest rate decisions. So let's look at both of those numbers right now. August numbers show the prices we pay are up nearly 3% compared to a year ago. So, for example, the price of coffee is up 20% over the past year, and eggs are 11% higher than this time last year. As for unemployment, just 22,000 jobs were added in August. The official hiring rate is stuck at levels last seen in 2013. It now takes about 10 weeks on average for someone who is out of work to find a job. So to talk about all of this and how it impacts you, we're joined by Brandon Walsh, the president and founder of Catalust Solution Group, based right here in Detroit. Thank you for joining us.
Priya, thank you so much for having me.
So why don't we first start with what could we see today?
Well, odds are we're going to see to your point, what you mentioned before, is a 0.25% cut in interest rates. It would be seen as a measured approach by the Fed, mostly baked into the market already, so we might not see a whole lot of changes, but odds are that's what we'll see. If there's if there's a surprise, we might see a 0.5 percentage point cut, but that would be, could be a little bit more of a shock to the market.
We know that the president has been pushing for some of these cuts for quite some time now, applying pressure, trying to see if that can happen. What would that mean for the everyday consumer? How could that impact us?
Well, a 1/4 percentage point cut, you won't see a whole lot for the average consumer.
Okay.
Like I said, the market's mostly factored that in so far since the last comments that the Fed chair made when he was in Wyoming. Mm-hmm. So you might see the market should hold steady. Okay. You might see some easing of interest rates on things like mortgages, credit card rates, auto loan rates. So there could be an opportunity for some refinancing, but it's something that we'd have to see. We wouldn't see right away. Might have to wait a few days or a few weeks, see what happens there, and there might be some opportunities there.
Yeah, the one thing that kind of piqued my interest that you were talking about are mortgage rates, because we've seen the housing market and everything that's happened since the pandemic. What are you going to be looking for from what comes out of the Fed today?
Well, to see if they're going to take an easing approach of that 0.25%, or if they're going to take a more aggressive cut with a 0.5 percentage point. And then we'll be able to see how that shakes out over the coming weeks and what that'll mean for consumers and everyday Americans.
I've been reading some reports where analysts are concerned about quote-unquote stagflation. Is that something that might be weighed in when you're looking at all the factors here?
Well, it's a tricky piece that a balancing act that the Fed has to make. They have a dual mandate of lowering inflation, right, and increasing employment. And right now we're seeing the opposite of that. We're seeing inflation tick up slowly, and we're seeing the job market soften. So it's a tricky balance that they need to make, and I'm glad I'm not in their chair.
Right, yeah, that must be a very difficult decision, especially when, as you mentioned, the markets are paying close attention to what the Feds decide. When we're looking at all of those factors, you mentioned mortgages or credit card interest rates, a lot of folks are living in debt right now. Do you see, I know it could be a marginal difference, but every little bit helps. Could there be a silver lining here or some hope for consumers? Yes,
you could see the amount of interest rates that they're paying on their credit cards might go down slightly, so they can give some easing there. I think some hope with lowered interest rates is you want to see increased spending in the market, which is great, but what are they going to be using for spending? Is it going to be their everyday cash that they have in hand, or are they going to be putting more on credit cards because they see this low interest rate? And what's that going to mean for the broader economy and the health of just financial security for an everyday American?
It's so interesting that you mentioned that, because when I'm talking to folks and doing some of these stories, I mean, you hear about the cost of eggs, you hear about how expensive things are. I mean, the price of coffee has gone up 20%. It seems like that middle class and lower income folks, they're just getting tapped out when it comes to how much money they have and the cost of everyday essentials.
Well, it's tricky because also we haven't seen the true impact of what tariffs might have on the economy and spending. We've seen inflation tick up. There may be some causation with that, with tariffs, but there might be more to come that we're not aware of.
Is it too early to tell if there would be an impact from tariffs potentially?
Well, I think you're seeing it in the price of coffee alone.
Yeah.
We import most of our coffee from Brazil, and the most recent tariff on them is 50%, and now we see a 20% increase in cost of coffee, and that makes mornings harder for people.
Yeah, well, somebody who has her coffee right here, that is very difficult. I've been paying close attention to that. Coming up, we want to continue this conversation. We'll actually be talking about consumer confidence, because we've got some conflicting numbers here, and as you mentioned, a difficult balancing act for the Fed. We'll see what your thoughts are when it comes to consumer spending and confidence, and of course those unemployment numbers. Stick around. We'll be right back after a short break. We are back now with Brendan Walsh, the president and founder of Catalust Solution Group. Thank you for joining us.
My pleasure, thank you.
So we're talking about consumer confidence, and what I've been reading from the reports is consumer confidence is slightly down, but spending continues to kind of stay where it's at. How do you make sense of those numbers?
That's a bit of an enigma,
right?
I mean, you've actually seen consumer spending increase a tick, and actually higher than expected in the most recent report. I think they were expecting a 0.2% increase in spending, and it ended up being 3 times as much.
Oh.
So, but that spending is concentrated. There was just a report out recently that spending is concentrated in the highest 10% income earners in the U.S.
We're talking like 50% of spending.
Yeah.
That is a huge chunk.
It is.
When you hear that, when you hear about all this spending concentrated with one group, you know, historically we've talked about the middle class. You need the middle class in order to sustain the economy. But if 50% of spending is now being done by the top, you know, by the 10%, what does that mean for an everyday shopper?
Well, for the economy, it puts it in a very precarious situation. Right. If that 10% decides to change their spending habits, if they decide to spend less, what does that mean for the broader economy? Since consumer spending makes up such a significant part of our gross domestic product, that can have a really negative impact if they change their spending habits. But you'll also see that the highest income earners it's easier for them to shoulder increasing costs and inflation, from impacts of tariffs, what have you, where that's going to be much more felt in the working class, middle class, where it's going to be harder for them to stomach increases in the cost of coffee.
Do you think that's why consumer confidence is trending downward?
I think it could be a good reason why. I don't know for sure, but it would make sense. It seems very logical, because just the slightest increase in costs of your everyday goods in the grocery store is going to have a far more impact on your middle class households. Yeah,
just eggs alone. I mean, that's the #1 item in the grocery store that I hear about the most. Also talking numbers when it comes to unemployment, these stats, the unemployment rate has been creeping up. It's now 4.3%, the highest point since October 2021. When you combine where prices are going with that unemployment number, what is your thoughts on that?
Well, I mean, if you have more people that are having a harder time finding a job, and you have increasing prices, that can make it a really tricky spot for Americans.
And how does the interest rate then play a role, or how can the feds help kind of either boost consumer confidence, or we create an environment where you can have more hiring?
Well, again, that's that fine line that the Fed has to toe with keeping inflation down and costs down for everyday Americans, but also increasing employment. And how do we do that? How do we do that? Yeah,
Neither of us know, but but that's because it's so complicated. There are so many different layers here, whether we're talking different industries, the potential for tariffs, you know, and also international trade. I mean, so much of our commerce relies on the rest of the world. And so if that changes, you do have a little bit of a lag time there as we're trying to readjust, right?
Yeah, well, and there's so much uncertainty.
Exactly.
Because we don't know what's going to happen with our different trade partners, and the president might be renegotiating a deal that we have with the UK right now, as he's going to be overseas. So we don't know. There's so much uncertainty, whether it's for business owners or just your average everyday American. It's hard to plan when you don't know what it's going to look like.
Should people be alarmed, or have we gone through periods like this before?
I don't think there's a cause to raise alarm right now. Again, the changes that you're going to see from the Fed today are either going to be very measured with that 1/4% cut. If it's that half a percent cut, we might see some alarm in the markets. But I don't think there's any reason to be raising alarms just yet.
Well, thank you so much for taking the time to talk with us today. We've got the U.S. futures up on the board right now. The S&P 500 and NASDAQ both down, but the Dow Jones is up. And of course, we will be waiting for that announcement from the Feds later today. Thank you so much for joining us, Brendan.
Priya, thank you so much for having me.